Good morning. It is an ungodly hour, so it's funny that my talk is called Believe in Something, because I had to believe in waking up early. Okay, so when I talked to the Blockworks team, we've been friends for a long time. They actually produced a podcast back in the, whoever listened to What Grinds My Gears? Did anyone listen? All right, thank you. So that was a beautiful moment in time. Blockworks was a tiny team, and it's amazing to be here at DAS to see all of you and to see how big Blockworks has become. So big shout out to the team. But we were sort of chatting, and they were like, what do you think is worth saying? And I was like, you know what? Nobody believes in anything anymore. Nobody. We see it in markets, we see it in people's personal lives, and we especially right now, I think, are seeing it in crypto. So I have 20 minutes with you. It's gonna be fun. I hope you like memes, and I hope you like charts. That's the vibe we're going for. First half is gonna be Old Testament, fire and brimstone. And then the second half is gonna be New Testament, non-denominational church. Maybe we get some EDM and some lights going. It's gonna be good. So let's talk about what it means to believe in something. So this is how most people's Bitcoin journey started. This is one of my favorite memes of all times. If you got into crypto before 2015, and it wasn't crypto, it was really just Bitcoin, sorry, I'm gonna adjust this wire, you were probably buying mushrooms on the internet. Fact, okay? Big fact. So we started with Silk Road and Bitcoin and this crazy community of people. I got into crypto professionally 10 years ago, okay? So 2015, I was investing in Bitcoin companies at this little known firm that didn't exist really yet. It was called Digital Currency Group. But we were basically investing in the first generation of founders that came after this first domino, buying shrooms on the internet with Bitcoin on the Silk Road. And there are all of these subsequent dominoes. But here we are. The US has a strategic Bitcoin reserve. Our president has a meme coin. Every bulge bracket bank, every major financial institution has a crypto strategy. One of the largest holders of Bitcoin in the world is BlackRock, one of the largest asset managers in the world. All of these dominoes have toppled, yet here we are, and we have no idea what to believe in. What's going on? What is going on? So, does anyone know what's on this chart? The blue line is market cap. This is the last 5 years of data. Blue line's market cap, orange line is traded volume. What am I charting here? What assets am I charting? Any guesses? This is the crypto market without Bitcoin and ETH. In the last 5 years, without Bitcoin and ETH, we've basically done absolutely nothing to grow market share or to grow traded volume. That is a problem. That is a big fucking problem. Look at it, that's the chart. Without Bitcoin and ETH, and it's really just Bitcoin, this is what we've done over the last 5 years. Hundreds of billions of dollars of venture capital. Hundreds of billions of dollars funneled into new protocols, L1s, L2s, bridges, L3s, app chains. This is what we've done. The numbers don't lie. That's why I like data. And MicroStrategy, the ETF, everyone's so excited. Retail's gonna buy Bitcoin, yay! That's not what's happening. Who is buying MicroStrategy? Who's buying the ETF? MicroStrategy, now Strategy, it's ConvertArb. These people buying these assets, they're mercenaries. They're not missionaries. They don't have the same mission as us. They're here to make money. Okay, so let's run it down. Institutions, their position size based on their 13Fs, 1231 they were filed. Are they mercenaries or missionaries? If we look at MicroStrategy, Strategy Now, a lot of missionaries because Saylor is Bitcoin Jesus, okay? He took the helm as Bitcoin Jesus, but a lot of mercenaries. If we look at IBIT, that's basis farming. The majority of large IBIT holders, it's not retail. It's not people who are long-term holders. They're people farming basis by going long the ETF and short Bitcoin. So the capital that's coming in, the flows that are coming in, they're mercenary flows. Important to understand. You gotta dive deeper. Bitcoin dominance, important metric. Bitcoin dominance peaked kind of in early 21, then it dropped off a cliff as we saw sort of this explosion in 21. Bitcoin dominance has been climbing. It's back close to its 21 highs. That's not the sign of a healthy, growing, diversified market. That's a sign of stagnation. We have market stagnation, but we also have spiritual stagnation in crypto. Okay, we can't forget Bitcoin started life largely as a social and technological movement, but the social aspect is how we got here. A bunch of nerds and misfits on the internet memed a global reserve currency into existence because they believed in something. So what's the next catalyst? The first catalyst, ICO mania. Holy shit, this thing is working. Next catalyst, I'm going to give credit to our boy Paul Tudor Jones. He deserves a big shout out. In 21, Bitcoin is the fastest horse. Huge watershed moment. Subsequently, we had FTX and all the mania. Then we had last year the ETF pump, crazy run. We just got a Trump pump. But the night that the strategic Bitcoin reserve was announced, Bitcoin started falling, and we've fallen off 20% since. So what's the next catalyst? We got mercenaries. We got market structure being still just Bitcoin. We have no more dominoes. So where are we going to go from here? We're all sitting here. Some of you put on your suits. You got some people in sweats and hoodies. You spent good money to come here. You got a hotel room in New York. Maybe you live here. You bought a ticket. Where are we going? All right, let's keep going. You're going to be a little depressed, but I'm gonna bring us back up. This is like the nasty part, and we're going to feel bad, and then we're all going to feel good. TradFi is outpacing DeFi. Okay, so we always talk about, oh, DeFi, like revenues, the chains, the protocols have revenues. TradFi is making the money. Okay, stablecoins, $8.7 billion in net interest margin on stablecoins is going to 2 issuers. Off that $8.7 billion, by the way, you know why people love stablecoins? You know why Howard Lutnick is grinning? He rips 200 mil in fees a year from holding treasuries for Tether. That's pretty nice. We have the ETFs, 434 million in fees on that roughly 100 billion in AUM. So the institutions, on a forward ARR basis, based on where we are now, are capturing 9.1 billion in annualized revenue off of crypto, just on these 2 products. On-chain revenue, here are our top contenders. Majority of these, by the way, are driven by meme coin trading. It's meme coin trading volume, okay? 9 billion in forward multiple ARR. TradFi is accumulating revenue more quickly than DeFi. So how's that going to work? Yeah, the institutions are here. That's what we kept saying. The institutions are coming, a wave of institutions. Oh, it's more of a trickle. The institutions are definitively here. Every single bank, every single asset manager in the United States of America and beyond has a crypto strategy. They're here, but they're here to take our money. So let's just get that straight. Tether, $97 billion of treasuries. They are the 18th largest holder of treasuries. They're a larger holder of treasuries than many G20 economies. So the US government should be much nicer to Paolo. They should be giving him medals. He's buying treasuries. Not a lot of people want to bid right now. USDC is 50 billion of treasuries, paying $100 million of fees. They're paying 20 bips to have a bank hold money market funds. That's a sweet gig. If I was an institution, I would love that. BUIDL, $1 billion of crypto natives. It's all crypto native money in BUIDL. Giving money to BlackRock to manage. So we're literally taking liquidity and capital out of the system and shoving it into a bank and giving people paper IOUs and calling it crypto. Trump, 45th and 47th president of the United States of America. Between Trump, Melania, and World Liberty Financial, hundreds of millions of dollars of fees extracted, right? It's part of the revenues attributed to protocols. And between all of the insiders who are selling and profiting, including LA VapeQual and others, billions in profit, all taken out of the crypto market. This is not value additive. It's not a retail onboarding moment. Every asset manager and bank doing crypto is earning insane fees for putting things on chain. And putting things on chain here means holding treasuries And in the case of Trump, selling retail crypto pipe dreams. It's not a great look. I look at this and I don't feel excited. Okay, I have some banger memes. Maybe this will cheer you up. Are you tired of being exit liquidity? Let's think, let's be practical, let's be reasonable. Institutional innovation and trench warfare are the same thing, okay? Institutional innovation, we have DeFi, pouring money into stable coins. Stable coins go into more DeFi. Then you have VCs subsidizing yield farmers, and it ends up with institutions holding money market funds for 20 bips. What's happening in the trenches with the meme coins? Same shit. Meme coins lead to DEX volume. DEX volume leads to more shit coins being traded. That leads to VCs subsidizing grifters by funding the DEXs. And we get, lo and behold, institutions holding money market funds at 20 basis points. It's the same thing. So here's what's really going on. This is one of my favorite memes. It's a great meme format. Stablecoins and DeFi, meme coins. What's the difference between these two pictures? It's the same money market funds sitting at Cantor Fitzgerald. Boom, this is financial innovation, y'all. Our biggest victory in crypto, it's not DeFi, it's not stablecoins. I have such a different viewpoint here, and I want to share it with you. Our biggest victory in crypto is proof of work. Bitcoin pioneered the energy to compute value chain and the creation of thermoeconomic money. That was the innovation. That was the core innovation. We now have 24 publicly listed Bitcoin miners with 24 billion in market cap. CoreWeave, which started life as a Bitcoin miner, going public at 36 billion. Crusoe, a company that started by monetizing stranded energy to mine Bitcoin, won the first 2 construction contracts for Stargate, the largest government incentivized infrastructure build on US soil in the last century. That is all because of Bitcoin. Between those companies, you have 1 Solana market cap. That's profound. And it's really beautiful. This is what innovation and human progress starts with. Infrastructure. And I'm not talking about more L1s. What am I talking about? I'm going to say controversial things because I want us to think critically. Call me out. Disagree with me. Come with facts, please. Controversial take 1. The AI boom would never have been possible without Bitcoin and proof of work. Bitcoin capitalized hundreds of billions of dollars of data center build-out, fueled by lowest cost electrification, driving persistent demand for hardware in a time when no one was innovating on semiconductor hardware, and pioneering a whole new business model for how you deliver compute by doing behind-the-meter co-location, off-grid energy generation co-located with a containerized data center. Modular infrastructure for humanity's most pressing needs, energy and compute. Let's be really controversial. Proof of stake was a mistake. Ethereum would be a $1 trillion protocol right now if it was still proof of work. Instead, what's happened? Ethereum's gotten diluted via infinite L2s because of proof of stake, which enabled that. The Ethereum ecosystem, had it stayed proof of work, would have dozens of infrastructure companies right now benefiting from this insane AI boom. And Ethereum miners would have pioneered GPU innovation. Let us never forget, look at the NVIDIA chart. Who remembers this? Thank you. NVIDIA was an Ethereum story in 2022. Nobody knew who NVIDIA was. And the stock had this crazy run-up in 2022. Why? Because people were buying GPUs to mine Ethereum before the switch to proof of stake. Where are we at? I'm kind of trying to gauge. I see some people shaking heads. I see some vacant stares, which it's early. I get it. We're doing good? Okay, are you with me? Okay, great, thank you. So where are we gonna go? We need to go back to the basics. Stop being dumb. Nobody needs more L2s. Economic systems are comprised of 3 things. Life on Earth is dependent on 3 things. You need matter, atoms. You need energy. And you need information. The global economy isn't some magical machine. It is a thermoeconomic creature. It is an open dissipative system that transforms energy into resources, goods, and services, okay? And all of this is predicated on this idea that digital infinity requires physical finite limits. That's why infrastructure and proof of work is so important. And this isn't a talk about Bitcoin. We're going broader than that. The future is about atoms and energy. We're going to need a lot of energy. There has never in the history of humankind been a civilization that has been wealthy without more energy. We need more. We need a lot more. The future is about a lot more energy, a lot more compute, and a lot more cryptocurrency. And we need new capital markets and new forms of financial engineering to make that possible. This is exciting. So let's talk about the numbers. Right now, there's a $1 trillion energy gap here on US soil, just to fulfill the needs of data centers coming online. This is from a recent Morgan Stanley report on the power gap for data centers. There's a huge immediate power shortfall, and there's $1 trillion of value in filling this gap just in the next 4 years. $1 trillion. I want to go build that. That's real money, real dollars people are willing to spend for crypto to go and solve a problem. I'm going to tell you how we're going to solve it. Credit funds. We talk about RWAs. Let's talk about credit. The biggest category of credit right now that's growing like a weed in terms of volume being deployed is energy and compute infrastructure credit. All of the largest PE and credit funds in the world cannot shovel enough money into this category quickly enough. Energy, compute, energy, compute, energy, compute. That's it. That's the story. That's the growth story. The North Star for us as an industry, the North Star for everything we're doing right now in this era of tech, human progress has always been defined by our ability to manipulate energy and atoms over space-time. That's why we're sitting in an auditorium with supercomputers in our pocket. The most obvious use for blockchains and tokens is to find, fund, and facilitate the way we use these thermodynamically constrained resources at civilization scale. That's it. So let's build the future. How are we going to do it? We're going to build protocols and ecosystems. We're going to orchestrate and optimize this infrastructure on these protocols. Then we're going to create net new commodities, digital commodities like compute and connectivity. We're going to meter them. We're going to trade them. And we're going to create capital markets, deep capital markets where these trade with a lot of liquidity. And then we're going to aggregate a lot of these assets and sell them in open marketplaces. That's the vision. So I'm going to give you 4 examples, one in each category of a company doing this, building this. And I want to see more. This is what we're funding at Crucible. This is what we're working on. We're starting with venture. We're going to do liquid. We're going to do credit. We're going to work across the capital structure. The future is not about us selling tokens to retail. The future is about crypto embedding itself in the biggest infrastructure build in modern human history that is thermodynamically sound. That's where persistent, durable demand comes from. The future of every blockchain, the fate of every blockchain, is persistent, durable demand for fee-paying block space. And the way you get that? Physics. So protocols, N1s, 00, super ambitious, actually going to the lowest layer of the OSI architecture and trying to build a whole new physical infrastructure network for crypto ecosystems or any high-throughput distributed compute network. That's incredible. Somebody's actually willing to go to the hardware layer. We haven't seen that in the last 15 years, not since Bitcoin. Commodification, right? We're going to see the pioneering, I think, of an entirely new space where DePIN and DeFi intersect. We also got to rename DePIN. It's bad term. But DePIN and DeFi are going to intersect, and we're going to see this whole wave of commodification. People used to run their compute on-prem. Then they ran it in the cloud. Cloud's getting crazy expensive. There's a big opportunity for someone to crack the nut here, not by cobbling up a bunch of supply and trying to sell it in these wonky marketplaces. We got to go and aggregate demand from non-crypto people. Optimization and orchestration, right? We need a ton of software to manage all of this hardware. It's about coordination. We're going to have agents optimizing individual efficient frontiers for this resource consumption, right? But they all got to optimize, work together, both at a facility level, an individual level, at a regional level, and then at a national level. These are sort of complex hybrid ecosystems that are going to have underlying markets that get created for optimization and orchestration. Super exciting. And then lastly, aggregation. DERs, distributed energy resources. There is a ton of energy out there. It's just not being utilized. Daylight, great project. The electron's the most important commodity of the 21st century. How do we get more electrons visible? You aggregate. You start with data. You aggregate data. Then you have an AI overlay. You start to actually route and create incentives for load balancing, dynamic load balancing in real time, supply and demand. Data centers can be demand responsive. Who knew? Compute workloads are actually flexible. So you create aggregation marketplaces for these assets to become flexible, demand responsive, and incentivized by economic incentives. And by the way, we can manage those economic incentives by settling in real time using a stablecoin. It's a beautiful thing. It's a beautiful future. I'm excited about it. Energy, compute, crypto, baby. This, in my view, is how we get out of the darkness. Believe in something, commit to something. I spent a decade building investment firms in the crypto space, spending the next decade of my life building a firm that's going to bring together energy, compute, and crypto. I think it's going to be the most important story in our industry over the next decade. Because if we want this industry to grow, we can't keep giving our money to mercenaries. We got to start creating more missionaries. And how do we create missionaries? We convert them to our religion by doing things that are useful and by solving problems for which there is persistent, durable, fee-paying demand, unsubsidized fee-paying demand. Follow the money, baby. Follow the flows. That's it. Please reach out to me on Twitter. I'd love to hear what you agree with and disagree with, and have a great desk. Thank you.